now the Fed potentially doing one or no rate cuts, or even potentially a rate increase, given what we've seen, given what we've seen in terms of the numbers, that would put, for the market to continue, a lot of pressure on growth because growth has to deliver. Is that possible, or am I misreading the situation?
Well, I think what that speaks to, it wasn't that long ago when expectations were that the Fed was going to cut aggressively in 24 and 25. And all of a sudden, we've shifted the expectations now where hikes are the next, the next thing that's coming. It reminds me, if you look back over the course of the last couple of years, it reminds me of what we saw in the second quarter last year, where there was all this talk about the fact that the Fed was going to possibly hike as their next move. And the reality is the macroeconomic dynamics, they just don't move that fast. Like the economy's slowly decelerating. The Fed is engaged in a modest easing cycle in response to that. And expectations are just whipping around wildly, whether it's aggressive cuts or a shift to hikes. And I think we're in one of those parts of the cycle here where expectations are getting overly enthusiastic that the Fed is going to not cut or hike ahead. That doesn't really make a lot of sense given certainly their typical tilts towards dovishness, and the fact that the economy is certainly not in need of meaningful hikes, and whatever tightening could possibly have been needed has already happened through market-based measures, with the long end rising so substantially.
As you look at these conditions,